Today I'm going to react to a video by Lynn Alden talking about Bitcoin treasuries as a way to de-risk your business. This is very important for business owners to understand. This has never been possible in history, and this is a way to instantly make your business more valuable.
Yesterday, you released it, a new look at corporate treasury strategy. I'll link this in the show notes as well for anyone who wants to read the whole thing. But I thought this was quite interesting, and you have an excellent way of a very let's say engineer's mindset in terms of how you structure things, because it always by the time you get through it, you're like, well, I don't know how you argue with that. But can you talk through that a little bit, because it seems that this is obviously, you guys invest in Bitcoin companies, but this is direct advice for any sort of company. Uh, you started off with just kind of this idea that, okay, the balance sheet versus the income statement, and how the balance sheet has sort of lost some of its importance in recent years. Can you talk a little bit about that idea, and actually why that happened, why that did lose so much importance versus the income statement?
Right. So basically, corporations, both legally and just what's available to them, they don't have really good savings assets. They hold like T-bills basically in money markets, and basically cash-like instruments as their savings. And there's really not that many good other options. And so the problem is that in that environment, they're not incentivized to save, because if a company is holding a lot of cash, that cash is not doing as well as what we expect from equity returns. So it's like instead of good for the company, it's actually like an anchor on the company. You'd rather have them pay it out in dividends or put it into buybacks, so you have a bigger share of the company. You want them to put that capital to work, which is a shame.
Now, they're talking about businesses on the public stock market and how investors look at that. But the overall applies, right? Which is we all have money sitting in a bank account for our business. And some people have more than others. I remember I spoke to an entrepreneur that had a year worth of their business expenses sitting in a bank account. If you understand inflation chops away whatever percent you believe inflation is that year of your spending power, you want to put some of that to work in an asset that will outpace inflation, if not all of that. I have figured out how to make all the revenue my company makes sit in an asset that grows faster than inflation. But public companies have to work in different ways, so it's very interesting to hear what they have to say.
Because it creates risk. A company without a balance sheet, if it's got no savings or limited savings, the company is entirely valued on its future earnings, which can fluctuate wildly. And the problem is it can be nonlinear. So if the company runs into a problem that impairs their earnings, and then they're trying to raise capital to fix the problem, well, now that capital is going to be very expensive because they didn't have any savings. The balance sheet doesn't matter, and all that matters is their future cash flows, which are now impaired by whatever they're trying to fix by raising capital. And so we generally see, universities last centuries, and they have these big endowments. They kind of get, you never really see like, oh, this university went bankrupt, because they have really big savings stacks. They have capital that can last them for a long time, whereas companies on average have shorter time frames, partially because they're not incentivized or allowed to really save. And even gold is not really good enough because it gets diluted over time.
And the whole endowment thing is amazing. Like I have a nonprofit and we were looking at that and like how colleges have hundreds of millions of dollars that get invested and they can basically survive just off that. And the revenue they get is like cherry on top every year because if you have hundreds of millions of dollars, even just getting 7% a year, you can run your business on that much money. So the overall idea I have is I want my business to generate enough revenue to create a treasury for my business so we can always borrow the cost to run the business from that treasury. And revenue is just the cherry on top.
By more creation. So it's, if you had to hold gold or dollars for 5 decades, you probably should pick gold. but it's still not enticing for corporations because it doesn't keep up with equity returns. It doesn't keep up with broad money supply growth. And so having something that's even harder than gold, but that's also easier to hold and move around and things like that, really it's a super powerful tool for treasuries. And that even goes back to the nation state question, which is there are nation states that are holding trillions of dollars of like U.S. treasuries, and so we're slowly rug pulling the national savings of basically every country. Um, and they can hold gold as an option, and many of them do. That means like, no one can literally rug pull, like no one can like just take their assets unless they go in there and get them. But then also they don't really get diluted as quickly. And Bitcoin is basically that on steroids. It's the type of gold that doesn't get diluted at all in the long run, and it's basically
And when they say it never gets diluted, it means there's only a certain amount ever created, 21 million, versus gold, there's always finding gold, right? It's just very small amount on this planet at least. There was talk of finding asteroids with trillions of dollars of gold. So gold long term is probably not the answer for store of wealth. But if you can create a digital version of that, meaning Bitcoin, where there is a limit, that starts to become much more interesting. And as they said, moving it around and doing things like borrowing off of it. When I said my goal is to create a treasury where we can borrow enough to run our business, that means we don't have to sell our Bitcoin, our Ethereum. We could just let it grow, outpace inflation, and then borrow to run our business. So the idea is borrow less than the growth of the asset. And over time, your asset will grow more than you're borrowing, and you are much more sustainable. And if you want to learn more about that, there's a 3-point guide in the description on how to create a Bitcoin treasury very easily using stackit.ai.
Gold in the 21st century. So in addition to being a really powerful payment network and all those features, it fixes corporate balance sheets, it fixes national savings, it fixes household balance sheets. As long as someone has a thesis that there's a high probability that the technology continues to function, the incentives work, the network gets stronger. And so I think it's powerful. The biggest downside to that all is its volatility. But in order for Bitcoin to become relevant, it has to get bigger. We like upward volatility. We like number go up, and we don't want it to take a century. We want it to, so it's got to have upward volatility. And anytime any asset with upward volatility is going to have downside volatility. If it only had upward volatility, people would just lever it, and it would just go to the moon. And it wouldn't, it has to kind of shake off that leverage from time to time.
So that is what most people ask. Okay, that works as Bitcoin's price goes up. What happens when Bitcoin's price goes down? And that's why Stackit.ai has AI agents that will look at your treasury's makeup. And if your leverage is too high for the volatility of coming down of price, it will sell off just a little bit of your Bitcoin or Ethereum to protect that leverage. So protect your loan so you can keep growing your portfolio. And that was the core of why I built Stacker.ai, is because I was doing this and I was getting to the point where I can get liquidated, and I would by hand do this stuff. But again, you can't do this 24/7 if you're running a business, you're on vacation, you're sleeping. And at one point, I did get liquidated while I was sleeping, and that's what made me build this. So the idea of the volatility going up means we, users of Stackit.ai, we get to take advantage of the upside and minimize our downside. So that's why you want to think about one, creating a Bitcoin treasury, maybe Bitcoin and Ethereum, I believe is the best way to do it. And again, protecting the downside however you can. That could be many things. You can just buy a lot more than you borrow. So if you're borrowing 20% of your treasury, you don't have to worry that much about downs. But as a business owner, sometimes we have to be tighter about how much we can save. So that's where Stack comes in.
And so whenever there's upside volatility, there's euphoria, there's leverage, and then there's downside volatility, there's fear. And so you can't really that's a inescapable part of the system until we reach a scale that's closer to its total addressable market. I would say right now we're at a tiny fraction of its total addressable market, and so it trades like an option. It trades like this. What is the chance this becomes relevant a decade from now? Is how many big pools of capital view it. And so the downside of that volatility is you can't. Most companies or individuals can't use it as their only savings asset because what you don't want to have is like a 70% drawdown and then you have to spend it while it's drawn down, right? So it's like it's there's unfortunately a little bit of a privilege there in the sense that the generally the wealthier you are, the more volatility tolerance you have, and so that's like a kind of an unfortunate.
So what they're saying there is, you can't buy $100,000 of Bitcoin and then next month you have something you need to spend money on and now the price is 50,000, so you can't, so you just lost 50,000 if you needed to spend it. This is why the way we do it is we bring in the 100,000, instantly borrow 70, 75, 80,000, put it somewhere else where it's collecting interest. That could be a Wealthfront, Aave, where you're getting higher interest rates than banks, and have that money sitting there if you need it. And then you can weather the storms of the ups and downs and volatility because we're protecting the loan. So this is where like as a small business owner, as a bigger business owner, you can take advantage of this asset class. I have created a treasury bigger than my entire revenue running this business. So think about that. If your business has made 100,000 a year, 500,000, a million a year, and you've been around for 5 years, imagine having a wallet of 500,000, 2.5 million, 5 million, right? And now that wallet just needs to grow 10% a year. And that's 500,000 of just gains from your treasury. And Bitcoin and Ethereum have been growing way higher than 10%. So I think this is the future way for business owners to get rich.
Reality, but basically it gives it so that at least for a portion of your savings that you don't intend to spend for the next 4 years, it's one of the best assets that someone could hold. And people, you know, like a lot of my readers would think, well, why can't they just hold the S&P 500 or why can't they hold XYZ? But I don't get that question in Egypt. When I go to Egypt every year, their options are real estate, which is now overbuilt because everybody picks real estate, gold or physical cash dollars that are melting ice cubes. The local stock market's not very good. It's very volatile and not as well returning as S&P 500. And it can be hard for people to invest overseas if they're like the middle class or working class. Wealthy investors can always move capital around, but normal person often has trouble. And then do you really want to invest in another nation's stock market, right? I mean, do you want to like have is that your primary savings? You technically now you're ruggable by an international entity. And so Bitcoin is just this really powerful savings technology for literally every level of society, from the household to the nation state.
And that is it right there. Think about this as a scalable asset that's going to grow in value because anybody around the world can buy it easily. Some people used to tell me, why not buy gold? And I would tell them, okay, right now, you want to buy gold. Right now, we're together. How do you buy gold? Um, I think we need to go downtown. There's a place I think I know that can sell us some gold. All right, so we physically have to go downtown, buy the gold. Then where am I going to put this gold? Oh, you have to find a place to store it. Okay, but what if I buy like $1 million of gold? Okay, so there's people that you can pay so they can store it for you. Okay, so I don't really love that. So there's all these variables that no, we're together. Right? I'm about to buy $100 of Bitcoin, $1,000 of Bitcoin, $1 million of Bitcoin. Anybody anywhere in the world has that same ability. That's why I believe it's going to grow in value much faster than other asset classes because of everything she just said, which is businesses need to store value. Individuals need to store value because their dollar melts like ice cubes. So what can we do? We can put our money into a thing that can store more value. Yes, there's going to be ups and downs, but if you can easily borrow off of those things, off of this asset, you could just pull out the amount you're going to need. So like in my example, bring in 100,000, borrow 80 immediately and have the 80 sitting there. Yes, that 20 you're putting at risk for the volatility, but if it goes up, you you won, right? If it comes down, the app will protect you. Stagger.ai will protect you. So the idea is now imagine if every dollar your business earned could do this. How fast would you be in a much different position? We all start businesses to become wealthy. Most people don't become wealthy because of their business. But any business owner making any amount of money. I just spoke yesterday to a restaurant owner. She was breaking down to me how our business is making about 10K a month, but it really needs to make 20. And if it doesn't make 20 in the next year or so, she may need to shut it down. So I was showing her if she can invest 10K a month into Bitcoin and Ethereum, and or Ethereum, she can end that year with 120,000 invested. If Bitcoin goes up, she would have even more than that. If it goes down, she would have a little bit less than that. So the idea is she would still walk away with something versus just the heartbreak of trying a business that failed, right? If it works, she can keep going and maybe go to 20K in revenue like she needs to. And now she's investing almost 250K a year and running her business. So now she does that for 4 years. She has $1 million asset and then some from just running a restaurant. And that's a restaurant. Imagine a corporation that makes 1 million, 2 million, 10 million a year. Now we're talking. So if you're interested in learning more, again, there's a free downloadable PDF in the description. Reach out with any questions in the comments, like, subscribe.